Nicholas Pardini, who is the founder of a wealth management firm called Spearhead Advisors in Orange County, California. And he's been doing some work on his channel that you should check out. And it's in the description below. Make sure you check out Analyzing Finance with Nick. He has taken an interest in this college football fan who wants to explore what some of the financial ramifications of everything right now are. And Nick, I really appreciate you taking some time joining me. Let's just set this up first. What you kind of give us a sense for your financial background and how you got to the place where you were interested in this as a topic, what's happening with the sport?
Yeah, I've been involved in financial markets for my entire professional career. I've worked as an analyst and or a portfolio manager at multiple hedge funds. And I currently run a wealth management firm where I kind of bring that expertise on the private client level. And outside, my interest in sports really kind of got started from my father being a big Nebraska Cornhusker and Fresno State football fan, even though he grew up in California. And then I started following this college football in like around 2004 and until about 2015 when they started excluding the G5 schools and rather unfairly in the playoffs. And it's like you can't have a sport where half the teams are 0-0 and eliminated. But I looked at this because the Pac-12, which was the power school league that I cared a lot about when I did care about college football, basically collapsed when USC and UCLA announced going to the Big Ten. And I was like, why is this? This doesn't make any sense from a geographical perspective or a like competitive balance perspective. So what is going on here? So I looked into the numbers of this, like the TV contracts and the patterns of this consolidation of industry and how it compares to other industries that I've analyzed in my professional career, such as the consolidation of the video game industry, the consolidation of airlines, consolidation of PCs in like the last 20 years. And if you go back further, like the consolidation of the auto industry in the 1920s, consolidation of railroads in the turn of the 20th century. Usually consolidation happens if you study the history of how companies and industries grow is when the growth is slowing down or outright stopping. And maturing industries are the ones that have the most M&A activity and the most consolidation, not growth businesses. Like industries that are growing, there's so much opportunity out there and money to be made by everybody. You don't need to cut the fat as much. Whereas when the market's more saturated, there's the same amount of mouths to feed, but no more money in the industry. You get consolidation because people want, instead of growing from having a same size piece of a bigger pie, you now need a bigger piece of a smaller pie. And I think that's exactly what's happening in college football right now. The amount of money and TV deals is adjusted for inflation, not much higher than the previous cycle, especially for the Big 12 and the ACC. And then the G5 is probably below inflation. I haven't looked into all the G5 TV contracts, though, to say that's the case. And then you have these bigger numbers for the Power Five, but that's really just directly taking share away from the other schools. And that's what I think is going on here. And that's why everybody's scrambling to get into these Big Two conferences, because if they don't, they might not have a program. And I thought this would be a more gradual thing, like every decade, like maybe 10 to 12 programs would drop off. But the reason why we haven't seen more of that is because we haven't had a real recession that's lasted more than a couple months since 2008. And usually that's when the dead weight in any sort of industry gets cut off. But the point that I was trying to make is that you've mentioned your channel, which I haven't really seen anywhere else, the idea of collective bargaining kind of becoming more mainstream and revenue sharing, that might be the catalyst that breaks the camel's back for the bottom 80 programs in D1 FBS.
Yeah, I mean, I totally agree. That's one of the huge hurdles for if you're a Big 12 or an ACC school to try and clear now. And I mean, we're talking about like this week being the time where the settlement in the House case could get all put together, and now we'd have a revenue sharing agreement in place. And if you're a Big 12 school and you're thinking about trying to pay $22 million per year to your student athletes, I mean, it's a really high hurdle to clear when you're so far behind in the TV money. So I think you're spot on there. And to me, it feels like I'm excited about this because it feels like you're kind of on board with what my thought is, and I think a lot of Big 12 fans, ACC fans, certainly Pac-12 fans, and Oregon State and Washington State fans would think about the long-term future of this. Like, hey, this may be a nice cash grab for now, but like, what is the long-term viability of this if you're going to continue to cut out large swaths of the country? Like, I know you made the point about the Big East, and you've already kind of lost the Northeast. Now you're losing the West Coast. And then if you start to get rid of huge fan bases in the Midwest, like there have to be diminishing returns here at some point, right?
Yeah. If you look at the demographics, like college football used to be historically a Northeastern dominated sport. But when this first major realignment happened was this D1 split in the 70s between FBS and FCS, and the Ivy League dropped down, and the military academies lost a lot of their cachet after World War II. Those are the main programs in the Northeast. Penn State is the only viable Northeast program left in the country. Sorry, Rutgers and Syracuse fans. And as a result, that region is largely checked out, especially with the rise of the NFL and in general, less high school kids due to concussion issues playing football in that part of the country. So even schools in the Northeast are recruiting from Florida and the Midwest primarily for their athletes, at least in football. Maybe in basketball, it's a different story. Same in the West Coast. California, high school football participation rate is well below 20% under its peak. California, even though it's the most populated state, I think is maybe the 5th most populated for 4- and 5-star recruits, which I think is kind of telling about the diminishing cultural impact of football here on the West Coast. And that, along with other demographic trends, is the sport is losing its appeal. And especially, I think the catalyst that's kind of breaking USC here is the Rams moving back to LA. It just hasn't been the same for them really since then, because now they used to be effectively the pro football franchise in LA for 20 years. And now with the Rams in town, they have a lot more competition. And so the West Coast is the next region I think is effectively gone from college football. And then the next round of consolidation, I think, is going to eventually be about 20 schools spread across most of the country. But if you exclude all these other smaller metro areas or states that this is their sports, they don't have NBA or NFL, the demand is going to go down. Like, let's look at a comparison internationally or even domestically in terms of minor league pro sports. Like, what are the ratings for the G League? The G League has more talent than college basketball, but nobody watches it. G League is shutting down its Ignite program due to NIL, and also because nobody cared. Minor league baseball, like AAA baseball, is not really something as a TV sport. It doesn't generate the same kind of revenue as the NCAA. And then if you look at European soccer, which is probably the best example of this, I'm not like Serie C in Italian league, or the equivalent of that in the third tier in the English league, the third tier in the Spanish league, and the third tier in the Bundesliga. Like, what are the kind of the ratings for those? I'm not a soccer fan, so I don't really know. But the fact that I don't know anything about it is probably an indictment on it. I think you're going to see more consolidation to the top. In this case, that'd be the NFL. Like, if I'm just going to have NFL Light with paid players, and it's only going to be 20 teams that compete with collective bargaining and a salary cap and all the other stuff that is in the NFL, why don't I just bother watching the NFL and skip college football?
Yeah, I thought one of the more salient points you made in the video that I saw where you broke this down is like, hey, the popularity of the NFL is still as strong as ever. I mean, stronger than ever. They're going to have games basically on every single day of the week now, because they know they can just push their content wherever and behind paywalls and all that. Meanwhile, you broke down the data. Give us some of the data on like college football, like the viewership for national championship games, like some of the things financially that are pointing to you on the downward trend. For college football.
I did a video a few years ago, like when the most recent data was 2021. It basically, the CFP ratings peaked with the first CFP in 2014, Oregon, Ohio State, and has been going down since. It has recovered from the lows. Like the Michigan-Washington game did better than the previous 4 national championship games, but it's still below 2018 levels, which was still well below 2014 levels. So you're getting a little bit of a bounce, but it's still in a broader, and I think a lot of that might have been because it was the Pac-12's last championship game, And this is the last one of this model before we switch to what's coming in the realignment world. And you look at college football attendance. It's bounced a little bit, but it's still below 2019 levels. And but from 2022 to 2023, it was flat, despite stronger TV ratings and a more geographically diverse list of contenders compared to previous seasons. Like you had like schools like Oregon and Washington competing along with Michigan and previous places like other than Ohio and the SEC country, which dominated most of the CFP era. You had a more geographically diverse list of playoff contenders. Texas was back too, and that didn't really do much for attendance. And so this, like, based on the attendance data, based on the participation rate of high school players, based on the TV ratings, this isn't a sport that's necessarily growing. And if you look at Disney's stock price, if you look at Fox, 21st Century Fox's stock price, and if you look at the stock prices of Warner and some of these other media companies, they're either way down or they're trading at very cheap valuations, which is implying not much growth. So I think that in Disney, like in several of its earnings reports, one of the albatrosses is ESPN overpaying for media rights. Like there's a real risk that these media companies regret overpaying on these deals. And that is something that's not being talked about. So great. Yeah, the schools are going to get a paycheck now. But the question is, 10 years from now, will they get the same kind of paycheck, especially on an inflation adjusted basis? And two, in order for the sport to remain viable for TV, will the TV people require further consolidation, which I think it's ultimately going to come down to a 20-team league at the end of this, with say like 9 from the SEC, 8 from the Big Ten, 2 from the ACC, and Notre Dame will probably be the only ones who are left.
All right, so one thing I want to just like leave this impression on people, because I think to me it is the most like poignant point that you made in the video that you sent me that we watched and talked about here. But again, just to highlight for everybody, like can you give me the list of industries, like examples of industries you've seen go through this kind of similar phase to where they have consolidated to the point now where college football seems to be going?
I think the most clear example is the auto industry in the mid 20th century. Which is the one I used in my video for that very reason. Like in the 1920s, you had like over 100 American car companies. And now you're down to 4, the traditional big 3 plus Tesla. And then you have each foreign country has a national champion. That's kind of the best example for this. Like they're probably fans of Packards back in the day, but they don't exist anymore because there's the competitive nature of the market. And now back in the 20s, buying a car was a big deal. Not everybody had a car yet. Now everybody has a car, and really the market is just replacing old cars for the most part. Especially the other thing I have to factor in, which I forgot to mention, is the enrollment cliff. I don't know if you've talked about this at all. Are you familiar with the enrollment cliff?
Not a ton, but I mean, just in general, I'd imagine college enrollment is probably not in a great place based on where.
Well, if you look at just raw births of people who are college age, the college demographics essentially peaked with the class of 2013, just a few years after I graduated from college. And really ever since then, the number of young Americans who are just of college age, not even factoring how costs are convincing some people may skip college or alternatives to school, or just in terms of raw numbers, you're going to have a natural decline. The top 50 academic schools aren't going to have a problem. Like they're still going to always get their students. And that's why like the acceptance rates continue to drop at like the UC schools or the Ivy Leagues or places like that. But the remaining schools are going to have a major decline in enrollment. And if you have less students, that's less tuition revenue. And some of the schools that aren't regarded academically, but have strong athletic programs, may have less support from the school, or they need to compensate from less support of the school from grabbing revenue from TV now to cover the shortfall. And if birth rates keep going down, I don't really see the bottom of the enrollment cliff is going to be at least 20 years from now. I don't know if you've talked about that, but this is a big issue going on
Yeah.
in a lot of universities across the country.
Well, I think it kind of plays hand in hand too with the idea that we discussed a little bit earlier of, okay, you're going to have swaths of the country that just they lose engagement. They don't care as much. And then with NIL and kids transferring all the time, there's not as much of a connection to the players anymore. And it becomes a little more like minor league. You're just losing a lot of the connection points to the school for the people that do care already. And then you're lessening, as you're talking about there, the amount of people that will be connected to the school in general anyway, right? So you kind of have a two-pronged problem there long term.
Yeah, less students mean less fans. Like, that is the one bummer of me going to UCSB for my college. We didn't have D1 football, but like I would have certainly been a fan if I went to a school like that. But but the thing is, if less kids are going to school, you're gonna have less future fans. Like, that's probably why a school like UCF has been able to rise so much, because they're somebody who's growing enrollment.
A ton of students, yeah.
Otherwise, in a pool of schools that are mostly shrinking in enrollment. So, yeah, it's kind of a dilemma here.
You kind of have that issue combined with the alums that are already there are losing interests in general already anyway, because it's becoming a little more professionalized with NIL and the transfer portal, and you don't have kids that are at the same school for multiple years longer. Like, we're doing more and more things to kind of
more like minor league pro sports.
Yes.
Like, at least with like before, the NIL is not a bad idea. People should have a right to have an image and likeness. The transfer portal is where it turns off people. It's like, how many of these people realistically are going to be able to complete a degree and transfer all their credits over in 4 years if they're going to 4 different universities? Like, that's where it starts to get a little bit incredulous, and in my opinion, is that like they're just basically athletes who happen to wear a school's jersey. And is that enough? Like, again, that's why it kind of reminds me of English soccer, because these clubs were just kind of based on community ties, and the smaller ones are more micro communities. And that might be the model if you want to preserve like the affiliation with a local community in a school, is to learn from England and kind of just build the pyramid, and so that everybody can kind of sort through what their budget is to remain a viable program. But yeah, I think auto industry is probably the best example of that, and airlines more recently. We used to have a lot more airlines, like say in the 80s and 90s, when flights became more mainstream to go travel places. But then just the costs, energy costs and unions and other things made just running an airline really unprofitable. Like Warren Buffett used to joke about never investing in airlines. That's how bad it got. And then they had a lot of M&A. And so airlines have become a lot more profitable because they were able to consolidate. And that was air travel is something, that industry that's growing, and they still had to consolidate. Just their growth was slower relative to costs. And that's the same issue with football. The TV contracts, at least nominally, are still growing, but relative to GDP, they're either flat or shrinking.
Well, look, Nick, this has been a really good conversation. I definitely appreciate your analysis on this. And it's, as I've told you, it's kind of like double-edged sword, man. I mean, it's very interesting. I love covering it here on the channel, but I don't think it's all great for the long-term health of college football that we all love. But Nick, before I let you go, man, just let everybody know where they can find your work here on YouTube or otherwise.
Yeah, you can find my YouTube channel, Analyzing Finance with Nick. And then I have a link to my Substack on there if you want to read some of my written commentary. But yeah, if you want to learn about how the world of finance and macroeconomics dives deeper into like aspects of your personal life and things like the cost of living crisis and just how these bigger picture things just impact the world around you and why they matter, check out my channel.
All right, perfect. Thanks, Nick. Take care.